How's it going, everyone? Sorry for not making any videos, first of all. But I took a little break. I accidentally blew two accounts or funded accounts, and then we just passed four though. We passed no five, passed five accounts. So we have about 225K in capital. So pretty awesome. I'm gonna show you the trade I took to pass these accounts, and then afterwards, I'm going to just start breaking down my strategy and how to use it every single day. It's probably going to be about 3 videos long. Not even going to lie, because I definitely, probably more than that, probably like four. Some stuff is quick, some stuff is going to take a bit to like break down and understand. But anyway, yeah, I'll show you. I already took a trade, but yeah, let's just hop on to the charts right now. Sorry, we're not hopping onto the charts, but basically took a trade, lost about 200 bucks, not really too bad. Well, I took about 10, 15 trades and lost about $200 on this account. I have four 50K accounts with Apex and I have one 25K account with one funded, which I'm being a bit more risky on since it's just one 25K account. So I'm hopefully every single day while I do this tutorial on how I use everything I use in the market on a daily basis, I'm just going to take a trade and risk about $200 per trade on this account to see if we can get a payout in like a week and a half or something, like a $500,000 payout maybe. Oh wait, no, $500 payout. But yeah, let's actually hop onto the charts right now. Actually, fuck, my bad again. Or didn't mean to swear. I'm trying to work on my swearing. But this is what we're going over. Boom. Literally, all my strategy really consists of is having a bullish or bearish higher time frame and lower time frame POI slash point of interest slash bullish or bearish level, a liquidity sweep level, draw on liquidity level, and what a draw on liquidity sweep is, which is very low probability, which I marked out. What a higher time frame and lower time frame fair value gap is. Higher time frame and lower time frame inverse fair value gap, and higher time frame, lower time frame sysd slash shift of structure, which is just change in state of delivery, shift of structure. They're basically the same thing, just a tiny bit differently, or a tiny bit different. Equal highs and lows, which is how you can spot, market reversals or potential market reversals, and they're also good for entries. New York, London, and Asia session highs and lows, previous highs and lows, untapped highs and lows, which are going to be part of a draw on liquidity a little bit. I rarely ever use them as a draw on liquidity because they're usually too far away, but sometimes they're close by and I just hold the trade till that point. Higher time and lower time frame, equilibrium, premium and discount, higher time frame slash lower time frame, market structure and previous structure point, and how to use it. A lot of people don't know how to mark out market structure. They just kind of go onto the charts and like, oh, this is a high, this is a low. Oh, it broke structure here. We're back, we're breaking this level. A lot of people don't know how to actually mark out structure. And then support and resistance doesn't really matter at all. You're probably never really going to use it. I just like to know where it's at because when you have all of this paired with it, it works really well. And then last but not least, AMD, accumulation, manipulation, distribution slash accumulated liquidity, and how to spot that. And then I am not going to go over this until I think I can teach it good, basically. And then for my entries, we have candle range flips, inverse fair value gaps, sysd slash shift of structure, 5 minute slash 1 minute respected fair value gaps, 5 minute slash 1 minute equilibrium, and 5 minute rejection blocks. That's really it. And one more entry. 1 min and oh wait, no, because a rejection block is an equal low, essentially. But yeah, and then after we learn all that, we'll be going over this and just some extra key points to keep in the back of your head while trading. But, okay, now we're actually going to hop onto the charts. I don't know why this changed from light. I want it dark. All right. So, oh, fuck. Yeah, I lost trying to take taking a bunch of buys right here. I was basically risking like $30-$40 per trade and ended up just crashing and crashing and crashing. I was trying to like catch a reversal because I thought I was a genius. Wasn't really trading how my strategy is at all. I was really just going with not the flow of the market. But anyway, let's just hop on to not hop on. Let me just show you the trade I took to pass my accounts right here, which was Monday. Oh yeah, yeah. I started off this week passing. Okay, boom. So this is really all my strategy is. Price pulled down into equilibrium of this higher time frame move, which is if we go to the higher time frame, I'll just mark this up right now. Rejection block. There we go. Basically, we were in a discounted price zone, and then we get rid of this. Pulled back down into my POI levels, my bullish POI levels, which they perfectly respected, and also these two little blue lines are liquidity sweep levels. So previous candle lows got swept. We respected this 30-minute bullish gap right here and entered in after this 1-minute IFVG. Boom. Caught a 1 to 2.5 to pass all the accounts. So let's just go on to here to make sure I was right about this equilibrium, though. Yeah. Actually, just going to go to the 1 hour just to even be more sure. Because the higher time frame, the better. Yeah. Perfect. Look at that. So from this lowest point here to this highest point, boom, price tapped into this equilibrium right here. 50% tapped into a discounted zone. Respected our stuff. Boom, took a buy. Basically, and we were also wanting to fill this gap right here because this was a huge opening gap from last week to the market open, and that's kind of what I was wanting to see get filled. But what should we start off with today just to get some learning down? I'm going to go over a few things right now. I'll probably just go over the basis of the strategy. So when we go into the next video and we actually start learning, we will kind of be on the same, not the same page, but we'll be on, like, you'll just kind of have a better understanding of what I'm talking about when I'm talking about just POIs and all my types of levels and what I'm seeing. So if you guys don't know yet, though, I trade a handful of different types of It's basically what every single course guru out there sells you, but all of them put together in one strategy that works very effectively. And that is CCT, ICC, and ICT. All these different concepts, and CRT. So, candle continuation theory, candle range theory. ICT is just inner circle traders. It's just ICT like a very little of ICT concepts, and ICC, how the higher time frame moves. So we have three key strategies for how the lower time frame moves, but then we have one very important strategy on how to see how the higher time frame moves, which all of them add up. Like you'll see in the future, all of these add up just perfectly together. And we'll start off with basically CCT and CRTs, candle range theory and candle continuation theory. ICT, ICC will be the last. Indication, correction, continuation, that'll be the last. And ICT will be in the midst of everything we learn. So, all right. Let's change this to bullish. These will be bullish candles, and red will be bearish. So let's do a bullish example. Let's say we are on... This can be any time frame. It doesn't matter what time frame you're looking at. I use this on every single time frame, which I will actually mark off right here. Daily, 4 hour, 2 hour, 1 hour. Actually, I'm not going to make this confusing because the 2 hour I really don't use, besides just marking out its POI level, which you guys will be able to do in the future. 1 hour, and then let me put in here 30 min, 15 min is the lower time frame. So we have lower time frame CCTs and CRTs and higher time frame, which actually, you know what? I'll just add in the 2 hour. Who gives a shit? Because I use it, so I might as well not gatekeep, I guess, even though you guys are going to learn it anyway. So you can also use the weekly. Let's just get this straight right now, because you'll come back to this and remember what I mean. So weekly and monthly, I only look at the weekly and the monthly time frame at the start of on the monthly. I only look at it at the start of the month, and the weekly I only look at it at the start of the week. That's it. I do not throughout after I look at it on Sunday morning, Sunday market open, I do not look at it until the next Sunday market open. I just like to see what is going on. I really don't use it for my strategy a whole lot. I just kind of mark out its levels sometimes, and that's really about it. So, but now let's get the time when we're supposed to be entering on these time frames. So the daily will be the 15-minute time frame. This is more if you're like a swing trader, day trader, you want to hold trades for longer. 4 hour will be entering trades on the 5-minute. 2 hour, 2 hour will just be 1 minute, and also 1 hour is going to be 1 minute. So let's add this. 15 daily, 5-minute, 4 hour, 1 minute. Why did that change? Oh. 1 minute, 2 hour, and 1 hour. Boom. So, and then the 30 minute and 15 minute will just be on the 1 minute as well. So I guess we can just add a little text there too. 1 minute. You'll be looking for this. If you're on these time frames and you're trading on these time frames and those moves, you'll be looking for entries on these time frames. Which when we break down the strategy, you'll be literally using all of this together. You'll be using the 30 and 15-minute liquidity sweeps along with the daily, the 4 hour, the 2 hour, the 1 hour POI levels, along with the 5-minute equal high or low with a rejection block with a 1 minute IFVG for an entry. And yeah, that was kind of a quick little like breakdown of it. But let's just so any of these time frames can be used. Nothing lower, nothing, well, a few higher, like weekly and monthly, but we don't, like I already just broke that down. Any of these, you'll be looking at these, all right? You'll be looking at candle ranges and candle continuation, just CCTs higher or lower. And then obviously the 15-minute, that's just for an entry if you're only trading daily. Nothing lower than that, which very, very rarely people do. But let's just get into it. So imagine these are 3 candles, right? We have 3 candles, and I'll go through like real-time examples. Or I might honestly do that in the next video. No, I'll do one real example of a bearish and a bullish one, and then that's well, where I will leave it off. All right. So we have the setup here. This is what you're going to be looking for, basically. It's just if candles are continuing higher or lower. And every single CCT higher or lower starts off with an initial candle range. So I'll mark this off with what? Rejection block color. An initial candle range. You don't have to worry about this dotted line. Starts off with an initial candle range. You're going to wait for a second candle right here to either close above or below it. So if a candle like this one ended up closing bearish below this candle range, you're going to be looking for sells, but this is going to be a bullish example. This candle ended up closing higher than the previous candle range from the top wick to the bottom wick on any of these time frames. Once that happens, this is going to be your level. The top of that first candle range, that's going to be your POI level, your bullish POI level. And essentially on this third candle move, you can get rid of that now because we know that this is the top of the candle range and it broke out. The second candle broke out of that candle range, so now this third one is tapping into it. Kind of went a little bit too far there, but the third candle is the most important. This is the one where you're waiting for price. Since this one closed, you're waiting for price to slowly get down here on any of these entry time frames, and then to give you an entry to basically buy and hold to the draw on liquidity, which the draw on liquidity is this right here. The top of that second candle that closed outside of that first candle range, that is your draw on liquidity level. And now, you might be wondering, what's a liquidity sweep level? All right, so the candle right here that closed beyond that first candle range, the low of that previous candle, because now this is the start of the strategy, but now this is the previous candle of the current candle. So this right now would be a liquidity sweep level, right? And yeah, so the top or the bottom of that initial candle range will always be either a bullish or bearish POI. And actually, I'll just continue a bearish example off of this, just to make this even less confusing. And don't worry about this. This is nothing right now. I'm just going to leave it there so I remember to break down a bearish strategy. But yeah, so the candle, this one right here, closed beyond this range, created that bullish POI. Price pulled the third candle after this one closed. This candle right here, this is kind of a bad, this would be how it looks. Because this candle closes and now this one opens. So now, during this candle's fluctuation, this is where you'd get your entry. You would enter in for a buy, let's say right here. And boom, you're holding to that draw on liquidity, the top of this candle right here, the top of the second candle, and then the low of the second candle is your liquidity sweep level. So if price decided to disrespect this level, this green POI level, price is most likely going to continue down to the low of this candle, and then once you get a buy, you can hold either. Once you get that liquidity sweep, you can either hold to that POI level for your take profit, or you can hold to the full draw on liquidity. You see what I mean there? And that's how I caught a 1 to 3 trade, the one that I just showed you, which I'll break down as one of the real-time examples. So now let's do, and this is what the third candle will look like, because you have these two, right? This candle is going to look like this. Like it's going to open up and it's going to be like bouncing up and down, you know, fluctuating, slowly making its way to the POI, creating that little wick. And then price is going to break back above that bullish level, and then you're going to enter in, and price is going to slowly hit that draw on liquidity, most likely continue up, probably fluctuate a little bit higher, and then close. You know what I mean? So now let's get into a bearish example. It's the same exact thing. Imagine this is your initial candle range. Boom. Price, let's just make this a bearish candle. Price closes below this previous candle range, making the low of this candle, if we're bearish, the POI level. And let's just add a little bit, you know, some wicks here, because why not? And then this second candle, you know, or no, the third, I'm sorry. Second candle closes outside of that for initial candle range. Boom. Now what? We mark off, obviously, the POI, and then we mark out the liquidity sweep level, because now the high of the, if we're bearish, the high of the candle that broke out of the initial candle range is your liquidity sweep level. All right? And then the low of the bearish candle that closed beyond your POI, or beyond your previous candle range, this is the draw on liquidity if you're bearish. So now you're waiting for, you know, price opens up right here, makes its way into your POI, could even do this. Like I said, price opens up, candle fluctuates, does its thing. You could get an entry here to take a, let me actually, I'm going to draw this out. So either price, what? I don't know why I did that, my bad. Price could either open up and just go straight for that liquidity sweep level, break back below, giving you an entry to sell, or price can make its way just to the POI level and give you an entry to sell for you to target, short, that draw on liquidity. And now, since you kind of get the idea of all three levels, right? Let's add in just this little bearish candle as example. Oh, wait, no, let me get rid of this, because now I'm going to teach you a draw on liquidity sweep, which is the lowest probability thing you can take, but it's high risk and high reward, all right? So a draw on liquidity sweep means a price, price opened up, didn't even go to the POI or liquidity sweep level. It decided to just go straight to the draw on liquidity without giving you an entry to get there. And then it breaks back above. Now, if you want, it's low probability, but you can enter there after we break back above that draw on liquidity, after we sweep it, and target that POI level that's untapped. that is another, you don't want to target the full liquidity sweep level. You just want to go to the POI. That's it. If you're doing draw on liquidity levels and you're entering off of the sweep of them, you can only target the POI level. Or even better, just target a 1-to-1. That's even safer. So yeah, this is kind of what this is obviously an insanely clean version, but this is what it looks like. This is literally what it looks like. Let me make, I don't know why, but these are supposed to be... Those are supposed to be red. We'll just cover that one up. Yeah, this is what it's going to look like. That is it. So let's go to the real-time example now, and I'll show you exactly how I marked everything out. Because now you're going to have a good idea of POIs, draw on liquidities, liquidity sweep levels, candle range, a little bit of candle ranges, a little bit of candle continuation. Obviously, I'm going to be going over this again in the next videos, just with only real-time examples, no more drawing. I hate when people kind of do drawings. I like just real-time examples, but I needed to do that so you guys have a good idea of where, like what the strategy is. So for this right here, I think I accidentally forgot to mark off this POI level, or I just didn't mark it off because it only tapped into a different one, but let me just add it in right now. Bullish POI. So, all right. And you're gonna be like, wait, why do you have multiple POIs? Well, because... Let me actually go to here. Let me just go to the 4 hour, make sure everything's right. Yeah, because I was just trading the 1 hour. I wasn't really trading the 4 hour. Or wait, I was. At least I think so. Sorry, let me actually make sure that I have everything right here, because I kind of deleted the stuff that looked confusing. So I need to like kind of replace it back there. Oh, okay, bet. Okay, so this was like literally right before that 4 hour candle closed. So yeah, this should be everything. So on the 1 hour, let's just start there. Came on to the 1 hour. All right. What do we see? Huh. Candles are closing higher and higher. What do you know? So look at this. Let's get rid of this. So you have this candle right here at 7 a.m. close beyond this candle right here and this candle right here. And let me do a little breakdown on whether a POI is valid or not. So if you can basically, because you're probably wondering, why isn't this POI or this POI or this one valid? Well, let me show you why. Let's just do this example right here. So if this candle right here closed beyond this previous candle range, all right, top of that candle range is your POI. Price ended up not pulling all the way back and tapping into this, but this is just an example on why POIs are valid or not. If you can drag the POI level over and it hits a candle, the one that didn't close through the previous one, so this one closed through this one. If you're dragging a POI over and it's hitting the candle that has the initial candle, or is the initial candle range, that's not a valid POI. So let me show you. So right here, this candle right here closed beyond this range and this range. You see how you can drag this POI over and it perfectly hits into that candle that closes beyond the range? We go to this one. Look at that. It runs into all these candles right here. So this is not a valid POI. And then this one right here, you drag it over, boom, it hits all these candles that aren't tapping in to this one right here, the one that closed beyond the actual range. So just to make it valid, and the easiest way of knowing if it's valid or not is if you grab the top of that POI, or the top of the candle, because it can be one candle can close beyond multiple candle ranges. We close beyond this one right here and this one right here, and you can perfectly drag the line over straight into that candle that closed beyond the range. So I'm hoping that makes sense. Let me know in the comments if it does or not. So let's go down to the 30-minute. We had two 1 hour POI levels, which were this one right here and this one right here. So we had a 1 hour and two 1 hour POI levels. So all right, now we can look to see what's going on, because we were looking at where is it? This candle right here. This one's the one that closed. So, oh wait, I can actually mark it off for you, just so it doesn't look so confusing, because you're probably looking at it like, what? Let me just mark out the candle that closed beyond. I'll go to the 30-minute. That red box is just labeling out that full 1 hour candle. So this 1 hour candle right here, from this 30-minute and these two 30-minute candles equal that one 1 hour candle. So now this 30-minute candle closed beyond this candle range right here. So now we have one POI level on the 30-minute. Obviously these are both the 1 hour POIs. So these still count, even though they run in to this 30-minute time frame candle right here, they still count because they're a 1 hour POI level, not a 30-minute. So we have one 30-minute POI level, and then what do you know there? We have a liquidity sweep level right here. The low of, because we didn't enter until about 9, so we were waiting for all these candles to close and for price to finally reach our POI levels. And as you can see, this candle closed higher, and then this one just continued to close higher, creating or just without even tapping into our levels. So now, since price never tapped into our levels, we can add this low of this candle that continued to just break beyond ranges, because before, like I said, it's 3 candles, so technically this was the liquidity sweep level right here, but then that changed because this candle closed all the way up here without even tapping into anything. So now the new liquidity sweep level is the low of the one that closed, and then this one opened up, finally tapped in to our POI levels and swept the low of that previous candle. And while this had that push up, after this one closed and had this push up, we created this 30-minute gap. So we have a 30-minute fair value gap right here that I'm also marked out because I knew price was going to want to come back, tap into that. So let's go the 15-minute time frame, because I kind of got ahead of myself, but I know there was one more level on the 15-minute. And this has to be relined up. All right, so on the 15-minute time frame, it might look a little bit confusing, but we have the 1 hour POI level, another one, so 1 hour POI level, 1 hour POI level. This is the 30-minute level right here. This is the 30-minute gap. We have the liquidity sweep of the 30-minute candle right here, the 30-minute liquidity sweep level. And then we have a 15-minute liquidity sweep level. If we zoom a little bit more in, right here, let me push it up a little bit. Right here, the low, because we still are inside of a bullish candle range. You might be thinking, but we're bearish on the 15-minute now. No, we're not. This is where CRT comes into play. We didn't break out of this candle range yet. You see how candles kept continuing higher and higher and higher? Let me show you. So right here, we start on the 15-minute. Let's just say this was the initial candle range. Boom. This candle broke out higher. All right. And you actually could have caught this buy, because look at this one closed higher than this one. This candle tapped back into that POI and just continued up, but I was not up at 7:45 a.m. So now this is the new candle range. Since this one broke beyond that previous one, now we have this new one. Oh, and then price continued to move up. So price continues to keep breaking highs, not breaking lows. Candle ranges keep changing. Boom. Still inside of this bullish candle range. So price finally sweeps the low, because this is technically the low still. It is a bearish candle, and technically this is the draw on liquidity level, not the liquidity sweep level, because like I said before, if you're bullish, the lows are the liquidity sweep levels, and if you're bearish, the highs are the liquidity sweep levels. So technically this would be the liquidity sweep, but it's not. This one's the liquidity sweep because we didn't break beyond a bullish candle range yet. We didn't break out of that until right here. We didn't break out of it until right here. So yeah, that would be your liquidity sweep level, and now let's go on to the 5-minute. I'm actually going to go over this later on why. This will be a later time frame thing, just equilibrium, rejection blocks, all that. So let's just hop onto the 1-minute and get this demonstration kind of over with. Because it is 11:20 for me, and I have to get up really early in the morning. So all right, now it's kind of cleared up. Now you're kind of looking at everything like, oh, so look at that. You can actually replay this too. Start new, get rid of that. Now look how clean that is. So we have the 15-minute previous candle liquidity sweep level. It's just that major low, this big push down. We came down, swept it out a third, or a I don't know why I even said, my brain is fogging up because it's getting late. Swept that low of the previous 15-minute candle, and then also swept the low of that previous 30-minute candle. Perfectly respected that 30-minute bullish gap we marked out. Tapped into every single one of our bullish POI levels, the two 1-hour POI levels, this one, and then that 30-minute POI level. Perfectly respected all of them, had beautiful reactions off of them. And what I mean by that is just we tap into them, we get, that big wick into it, pulls back up, closes as respecting it, and then we get a perfect entry signal, this inverse fair value gap right here on the 1-minute, entered off of that right after this big candle closure. And then that's the thing. If you're looking to buy and sell and all that, you have to wait for price to break back below, or back above if you're buying and back below if you're selling. So these candles made its way down to here, tapped into our levels, and broke back above all of them. They don't have to break back above all of them, but they have to tap into a POI level and break back above it. You don't want to be entering trades all the way down here, you know what I mean? Because now it's like you're way overextended past all these POI levels, and price could make its way back up, but most likely price is just going to continue into that downtrend. So yeah, if we're bearish, let's say we're bearish, want to wait until we tap into those bearish levels, break back below to sell. And if we're, bullish, wait to tap in, break back above with an entry signal, wait for all this to happen, and boom, to buy. And then If you want to be more conservative, I usually always just go for 1-to-1 trades, sometimes 1-to-2, but you can obviously hold this to every single point you can really imagine, which I'll go over into the next video, because you guys need to know where draw. I only showed you one type of draw on liquidity, just the top or the bottom of a candle. There is multiple draws on liquidity that you would want to not mark out, but you can just keep them in the back of your head and keep an eye out for them and mark them off on your chart in case you want to actually target the full draw, every single draw on liquidity you can. Which obviously, the more you're targeting, the lower probability you have of hitting the take profit. That's why when you're trading 1-to-1s, I would have been in and out of this trade in literally 30 seconds. But 1-to-2s, I was in it for about, or 1-to-3s, I was in it for about 5 minutes. So after this could have just pushed up and then dumped and taken me out at break even, because that's another rule. Any single type of trade I take, if you're still here listening, this is like a little gem. If I'm trading a 1-to-1 and my draw on liquidity and where I want price to go to is a 1-to-1, I go break even at the 50% of any take profit level. So right here, if price came down, I entered in right here. Price taps into this, I'm setting my stop to break even right away, and either letting price come down and take me out, or it just goes to my take profit right away. Or if it's a 1-to-2, then you go break even after price gets to 50% of that 1-to-2. So if price, you buy in right here, and price taps into this, then you go break even once this level's hit. And there's also other things like levels you want to go break even at. For this trade specifically, yeah, we tapped into almost 50%. Oh yeah, no, we did. We tapped 50% of this full take profit. But another reason why I went break even is because we have this opposing bearish gap right here. We have this opposing bearish gap right here. So the second I saw price tap into that, because we respected this a bunch of times before. So once we tapped into that, I went break even right away around when the candle was right here. So not even close to the 50%, but it was right here. Tapped into that, went break even immediately, and then let the rest play out. Because price, obviously, if we tapped into that gap, price could have respected and continued down. And you want to preserve your capital as much as possible. This is one of the riskiest things you can get into. So you want to go with the rules of preserving capital. You don't want to be one of those people that don't set their stop to break even because they believe it's just they have too high of an ego, and they think that if you put your stop to break even, you don't believe in yourself and you don't believe in your strategy. That's not the case at all. You want to preserve your capital in the most riskiest business you can get into. But that's going to be it for me today. If you guys liked it, like the video, leave a comment. If you have any questions or comments about the strategy, or if I didn't break it down good enough, tell me to go over certain parts that you want me to revisit. Even though this is just like the intro to the actual full tutorial. I'm going to be going over bullish and bearish examples of what I just went over regardless. In the future videos, I just wanted you guys to be on kind of just a better understanding of why my chart looks the way it does. But yeah, thanks for watching. Join the free Discord and trade with me every New York session. Follow me on Instagram and all my other stuff, and check out the affiliate links if you want, and go get some % off of random things. Yeah, I'll see you guys in the next one. Thank you.